Dividend investing is a great strategy for consistent monthly passive income. However, one of its major drawbacks is the long time it usually takes to see substantial results. But what if there were ways to retire earlier and enjoy your early years by living off dividends? In this video, we'll explore the fastest ways to achieve just that. Before we get into the dividend investing, remember to like this video and subscribe to our channel for more helpful content. Dividend investing starts by purchasing stocks in companies that regularly distribute dividends. What makes this strategy appealing is its ability to provide income that isn't reliant on the stock market's volatile swings. Instead, dividend investors receive steady payments based on the company's profitability, offering a more dependable return. This aspect is particularly attractive for retirement planning and navigating bear markets. Notably, Warren Buffett is a renowned advocate of dividend investing, emphasizing its disciplined approach for achieving remarkable success. The amount you must invest to sustain yourself with dividends depends solely on your lifestyle and spending habits. According to the U.S. Bureau of Statistics, the average American spends roughly $67,000 annually, equating to approximately $5,600 per month on average. However, your personal spending habits may require more or less, so it's important to adjust this figure accordingly. By adopting a frugal spending approach, you'll find that a modest investment in dividend stocks can generate pretty good income to cover essential living expenses while allowing spending for enjoyment. Naturally, the more you invest, the higher your income. But for the sake of this video, we'll work with an annual income goal of $40,000, enough to cover basic living expenses for most individuals. Although dividend investing fundamentally requires patience and discipline as a long-term strategy, two primary approaches can help you reach financial independence faster. Covered call ETFs represent a fund type that allows investors to receive income from both stock appreciation and dividends. These ETFs invest in stocks while simultaneously writing call options on these stocks to generate additional income. Call options grant the buyer the right, though not the obligation, to purchase a stock at a specified price within a defined time frame. When the ETF sells call options on its portfolio stocks, it collects premium income paid out as dividends. So, if the stock price surpasses the call option's strike price, capital gains may also be realized, as the ETF is compelled to sell those stocks. Some well-liked covered call ETFs include QLD and XYLD. These funds offer attractive yields in the double digits, surpassing the yields of many conventional dividend stocks. The 12-month trailing yields for these covered call ETFs are QYLD 11.60% and XYLD 12.92%. While these ETFs provide a more stable stream of passive income by offering income from both dividends and option premiums, they do come with risks, such as options expiring worthless or stock price depreciation. So, what's the investment requirement to retire with covered call ETFs? To attain an annual income of $40,000 from covered call ETFs, you would need to invest between $250,000 and $300,000. Considerably less than what traditional dividend stocks demand, which is around $2 million for the same income level. High-yield real estate investment trusts, REITs, are corporations that invest in income-generating real estate properties, including shopping malls, office buildings, and apartment complexes. These firms often distribute a substantial portion of their earnings as dividends to shareholders. Some prime REITs for dividend income include Blue Rock Residential, Apollo Commercial, and Omega Healthcare. REITs have a history of consistent dividend increases, providing a consistent income source to their shareholders. Over the past 20 years, U.S. REITs have delivered an average annual return of 10.8%. It's important to note that REIT yields can fluctuate due to various factors like occupancy rates and market conditions. While they offer higher yields compared to traditional stocks, they also carry higher risk, especially during economic downturns. So, how much would you need to invest to retire with REITs and achieve an annual income of $40,000? To earn this income with an average yield of 10.8%, you would need to invest approximately $400,000. This figure can vary depending on whether you diversify across multiple REITs or concentrate your investment in one. One practical approach to achieving retirement with REITs is by consistently investing a fixed amount each week and reinvesting dividends until you reach your desired portfolio size. With the right discipline and patience, It's entirely feasible to attain financial independence through REITs, investing in as little as 5 to 7 years. A well-thought-out plan is essential when it comes to investing for dividends. You should have a clear understanding of how much money you require and what your goals are. This allows you to select the most suitable stocks for your portfolio and make sure you stay on course over time. It's important to calculate your living expenses carefully and confirm that your investments generate enough income to cover them. Whether you can live comfortably on less than $40,000 or need more to sustain your desired lifestyle, having a plan tailored to your circumstances is important. Additionally, it's worth noting that, unlike traditional dividend stocks, covered call ETFs and REITs typically pay out their shareholders on a monthly basis. This feature enhances their appeal as options for generating a consistent income from the stock market. In conclusion, investing in companies that consistently provide reliable dividends is a great strategy to achieving financial freedom. Whether you opt for stocks, ETFs, or REITs, it's important to understand the associated risks and create a plan that aligns with your risk tolerance. With a touch of patience, you can start on your journey toward financial independence through dividend investing. Which option do you find more appealing? Covered call ETFs or REITs? Share your preferences in the comments section below. As always, we hope you found this video informative. Like, subscribe, and we look forward to seeing you in the next video.